The Federal Reserve making a policy error. Today, we're seeing some very crazy and interesting divergences in the bond market and currency market. Today, the 2 year yield is down 1.16% on the daily session, but the US 10 year yield is actually holding a little bit more firm. It's trying to go positive on the session. So you're seeing a little bit of this divergence between the long end of the curve and the short end of the curve. This typical blowing out of the spread between the 2 and 10 is naturally and statistically a very bearish sign for equities moving forward. It is basically telling us that the long end bond market is calling the Fed's bluff. The Fed is potentially losing control of the short end of the curve and they're making policy errors. Right now, interest rates are trying to press higher in the near term. And if this bullish pattern on the 10 year yield pushes higher and breaks out and triggers this inverse head and shoulders, it is going to force the Federal Reserve's hand. It is going to dictate a policy mistake that the Federal Reserve is likely making here. Right now, that spread is getting to a bit of a boiling point, a dangerous zone. You really don't want to see a differential spread of 50 basis points. Right now, the 2 year yield at 3.9% and the 10 year yield at 4.48%. You're starting to widen that spread, and that again, over a longer term view, is very bearish for equities and stocks. Just keep that in mind. Right now, long end bond market is signaling potentially some dangerous macro events. Is the Fed losing control of the short end of the curve? Time will tell as we progress through this market. The Dixie did make a sharp drop. Perhaps all of this news between the long and short of the curve is being influenced by Powell and Trump's little feud, constant rumors that Powell is going to be fired. That likely is not going to happen. Powell is still set to finish his term. Going into May 2026, I think the markets will remain with Powell. I don't think he's going to step away. He's likely going to solidify himself in his legacy and finish out his term, despite what Trump is saying here, this jostling back and forth. But keep your eye on that spread because that statistically is a very important macroeconomic indicator to watch. There's a lot of things you can watch in the market, but understanding when that spread starts to widen between the 2 and the 10 year yield is key to understanding which direction the stock market is likely going to trend over the next 6 to 12 months.